Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Tuesday, July 9th, 2019. Not a lot to report today, but there are some developments worth noting, so I'll do a market wrap today. Today was a flat day. The SPY was up about 0.12%, 0.12. QQQ was up exactly 0.5% today, so the market's pretty much gained what the little amount they lost yesterday. So again, not a lot, but there's some things worth pointing out. And really, I'll get to the 60-minute charts of QQQ and SPY. I know that's who the majority of traders trade, but I like the futures, especially at this point in time, because the charts are a little more clear. There's some, quite a few reactions because the futures trade virtually around the clock. You get a lot more candlesticks, a lot more reactions to pick up on trend lines, support and resistance levels. So what we're looking at here, that's the front page of the site. I'm just going to go over the 60-minute charts of the futures, what happened today. So this is really picks up from where I left off last night. As I always say, the markets are dynamic, and so is my analysis. So this morning, pre-market today, a little before 8 o'clock a.m., I posted, took these screenshots and posted that we had bullish falling wedges forming. We had hit my targets. That was first and foremost. The QQQ, I had that initial target of 77.60, and that was hit in the overnight session. And while doing so, what you can see down here, we put in positive divergence on the RSI right here, not so much on the PPO, and these what I refer to as small bullish falling wedges. So you have, remember, more importantly, you have those wedges set up on the heels of these much larger bearish rising wedges. So I said if these pop, that probably give us an upside rally. I followed up, which I'll get to in a second, with some targets which were hit. And so that's exactly what happened. The minute the market opened up, boom, we popped those wedges. It was impulsive, which confirmed the breakout. And so we got the rally today. So again, that was a little before 8. Right after the markets opened, I mentioned that they broke out impulsively, and then I added some two targets here, and slightly favoring reverse off T1, but we went through there, and at that time we hadn't hit my target on SPY or ES, which I'll get to. So my final target was 28.44. You can see right there, T2, which we did hit. We hit 78.44. Well, at that point we had hit it. I'll get to that chart in a second. And so I am expecting this pullback. Why? One of the reasons was that it wasn't just price resistance, as I mentioned in this update on the site. You can see the price resistance levels. You can see this reaction high, then we broke that level. There's a reaction from below, and another reaction from below. And so you have price resistance, but more importantly, or as importantly, the measured target. If you take the widest part of the wedge, which I'm drawing right here, and then you add that to where the wedge broke out, that gives you your measured target. So the measured target now on these small wedges has been hit. So again, this is what sometimes confuses people. This is a short-term bullish setup, or was this morning at least, which has now been hit within a larger bearish outlook based on these large rising wedge patterns here that just broke down. So again, that was updated, my last update on the site at 1:47 p.m. That was then. Let's get to the SPY charts while we're here. ES, I should say. There's the ES wedge, posted again before the market opened. Right when the market opened, posted it popped impulsively. First target was there. Added it, the only target for SPY, or ES, I should say, 29.78, and then that target was since hit. And so now we'll get to the updated charts, which are live right now as the market's already closed. Same, there's that T1 level right there, as I had 78.44, and you can see that's pretty much what stopped the rally cold today. Now the day isn't over. We can certainly continue overnight, but the fact that, again, when I'll show you the measured target here, the widest part of the wedge, which has now been hit, final target, that I favor reversal in the overnight session. Come on down to hit the next target there, 77.25.50, we'll call it. There it is. Pretty well-defined support. And I also made mention that my convictions aren't high. I shared this as a potential trade idea to reverse from a long to short there with these targets being hit. But the big thing is tomorrow and Thursday, Jerome Powell, the Fed chairman, gives his semi-annual update on the markets, his semi-annual monetary policy testimony tomorrow at 10 a.m. Wednesday before the House Financial Services Committee, and then on Thursday to the Senate Banking Panel. So right now, as I mentioned yesterday, all eyes are on what the Fed is going to do, and so they'll be digging through every little word, every little phrase that he says, picking up on that. So point is, we might have some volatility, and whatever he says, if it's perceived as bullish for the markets, that may override any short-term technicals, and if it's perceived as bearish, that could get us down to our next target quickly. Just to point out, if that level goes, this is ES, from here, since we already hit my first target, I would expect if we come down, we've already hit it once. We had the initial reaction. That's why I list multiple targets. Each level is where a reaction is likely. That's a reaction. So the next time, if we come down overnight, 29.55 and a quarter, and that's also backfill the gap. And then should that level go, next stop should be 29.18 or so right there. You can see on ES, and I think I already showed you NQ. Yes, I did. So there's the targets on NQ. Here, we'll zoom out a little bit for you here. There's the whole pattern right there for you, and some additional targets. And as promised, the 60-minute charts, the SPY. Nothing exciting. Again, we've had the breakdowns. SPY broke down off from the rising wedge as well, similar to the futures we were just looking at. We have this is the bigger picture here, these lines here, divergent high, bearish rising wedge, breakdown, but not impulsively. So it's almost, the Powell's speech is probably as significant as the last Fed meeting, and of course they're going to meet later this month, and so that's what the market's trying to cue in on. As I said yesterday, there's, I don't forget what it is now, about a 90% chance we're going to get a quarter-point rate cut, less than 10% chance of a 50 basis point cut. But again, if those numbers change, you'll see some positions shuffling in the market. So that's why this breakdown hasn't been impulsive. There hasn't been much follow through. So you have to put treat it with a little bit of skepticism, if you will. But take it on face value. It is a break of support. Sometimes this happens. You get these breakdowns, and there's some market event just hanging out there, putting everybody in a holding pattern, and then the charts go on to play out as they should. So it very well could be foiled. Powell's testimony has the potential to foil this, but if you second guess all day long what's going to happen, you never do anything. I'll say this too, there's no reason to be heavily invested right now with that coming out, but with that being said, the charts are indicating something along these lines. That's SPY, QQQ, and if Powell changes all that after tomorrow, so be it. QQQ isn't far off the highs, but so far it has a pattern of failing there. We've had 1, 2, 3, 4 failed attempts, and then boom, couldn't get through, bottom fell out. Tried at it again, 1, 2 so far, almost there again. Will we pop it? We could. And just the posture of these indicators, everything looks like we might. PPO's curled up here, but if we do, a lot, like I said before, I went on vacation. It doesn't change. The long-term technicals haven't changed, nor would they on any more upside. Should QQQ pop above there, then all we're looking at this point, unless it could be more, but right now, if it's just a marginal new high, it'll be a back test of the trend line and simply extend this divergent high that's already in place right there. Sometimes a wedge breaks down and that's it. You get the breakdown and then the sell-off, and other times, and it depends, almost equal odds, you get a back test of a wedge at a higher level and then you move lower. So either way, if it's going to play out this way, you're not talking a lot of upside. So that's where we're at. It should reverse somewhere in there, after making a marginal new high, if these charts are going to play out the way that I would expect them to. Okay, and since this video was so short, I'll just mention, members, I just wrapped up an extensive video covering gold, all the other precious metals, silver, platinum, palladium, and the mining stocks, as well as the US dollar and euro, highlighting both the longer term, near term outlook, some key levels. That video was just uploaded, uploading right as I wrap this one up here, and will be published shortly. And then trade ideas, this one's already you already hit the first target, so I'll share it here in the video. Just things we share in the trading room. CBDS posted this one earlier today as a trade setup with a breakout over this trend line here. Just shortly after that, the stock did break out and went on for a quick 14% gain from there. Popped up, doesn't look like much because it's a low price stock, but went up, hit this 194.50 target, and so from there, where is it now? Let's see where it closed. I didn't even have a chance to check it. CBDS. That's it. Parked right on it. You can see that after hitting it. There it is. Hit a high of 195, close enough for government work. Half a penny over my price target. And so, this one plays out the way I expect. As I said on that last update there, that these things, you have one or two options there if you've traded this one today on the site. If you get a pullback, because that is resistance, you can look to position and a pullback to support, such as a back test of this trend line. There's some horizontal support there as well. Or just let it run. These little low-price pot stocks can become much more overbought. That's nothing. A 28% move in a stock like this, you can see right here, dwarfed that in 3 days right there. So, two ways to trade it. You either take your profits, get out, take your quick 14% and run, or just set a stop to protect profits somewhere in there and let it run up to that next target there. And at that point, probably best to get out, although I have a line right here. This would be my max target. I should have updated that in the trading room, but I'll do it now. I'm just, like I said, slow day, not a lot going on. And these are only kind of things I'm comfortable, trading right now. You get in and out, things that don't have a high correlation to the market. Those are the type of stocks that I think you're more bang for your buck than things that are heavily indexed in QQQ or SPY, because again, whatever Powell says tomorrow is going to move the indexes. And if you're trading Apple or Facebook or any of those, they're prone to whatever inflows and outflows are going on in QQQ at the time and SPY. So these little niche stocks are kind of the way to go, as well as commodities and other things like that. So we'll wrap it up here, and again, I'll have that video out on gold published shortly for members, and we'll pick up tomorrow after Powell's speech, see what the market does. This has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it.